Good afternoon, and today is October 13, 2023, and it's Friday. So it's the last trading day of this week, and this week we have high impact news, which came out on Thursday, which is the CPI number release, and is higher than expected. So the market react negatively. It sell off both yesterday and today. So today is open right here. It's open 436.95, but actually on the Thinkorswim platform we have, it's open at 435. 435.21, and it's closed at 433.55. Yep. So right here we just get percentage right there. So it basically it dropped negative 0.46%, and wow, you see the volume is significant drop today. You see that volume, just 32 million share. I mean, that's the lowest volume ever I see. Very strange. Let's refresh. Oh, now I see. Oh, okay, so we get a number right now. Yes, exactly, the open right there, 435.21. That number maybe from yesterday, right? We need to refresh so it clear out the cash. Yeah, that's right. And it's closed at 433.55, 431. Sorry, it doesn't provide a close price in here. But anyway, it dropped 50%, right? That makes sense right there. And the volume is 94. That's good volume right there. The average is 77 million share. So let me get that number. Okay, now we can go to the chart. 1 minute, right? We saw that it is open today at 435.55, and it closed at 433.55. I mean, it's 435.21 and it closed at 431.25. So right here we have the open right here, right, which is 435.21, and it closed 431.55. So this high and low is the 1 hour candle right there. That's how we overlay the high time frame 1 hour on 1 minute right there. Okay, let's review our practice trades that we take today, right? So basically this is the London, right? We saw that the Asia high in the pre-market take out the close. So basically it start out still with you know, between the range of you know, the prior day. So that's how we see that in the pre-market. So that's the huge range from, you know, high to low right here. So it start out at Asia within this range, and then you see the London, the ODR, it take out London high, and then after that it just drop. The drop from the London take out the low Asia and below the close. So right here it gives you the signal that it's gonna go down. It break this structure right here. So if you pay attention, you break the structure right there. This is the downtrend, right? So for this downtrend to stand, so even though it's go up here, but it still maintain the downtrend, so we can short them right there. Yeah, especially it go at this level right here. We mark this level on the weekly chart. We see that. Just go back to here, right? So right here we see the phenomenal, and it opened above the yesterday close. So it's open at 435.21 above yesterday close at 433.70. This is open right there. Okay, so let's see what else. And then we see that on the here's what we see on the before the market open, right? We saw that we have this scenario right here. We have the observation, right? So basically on the 1 hour time frame, we see the market structure shift right there. Because in the uptrend, we have to pay attention of the swing low. So in the uptrend, we wanted to make a high low. Whenever it start make a lower low, then that count at the market structure shift right there. Okay, so this is a market structure shift, and we want it to be make a lower low right here. Then that will be the confirmation that market structure shift right there. So you have market structure shift, and then we have a confirmation. Then we know for sure that it's gonna be a market structure shift, and we will short when it's retracement. But right at that, but in the pre-market this morning around 6 p.m. right, we don't have the confirmation yet, so we have to wait to see whether we short we're up here or not. So but right here, if someone in the pre-market, they can trade the turtle soup right here and the level entry right here, they're gonna put a buy stop at this level, and they can get, you know, a good rally right here, and they can get out up here. So that's what we observed before the market. Then we saw the short setup happen. Okay, so when it's going around 9:44, and we identify this level at a turtle soup, right? The last 20 candle up high. So this is a perfect, you know, setup. At first we tried to do the level right here, but it's not working for that level. You see, if we put level right here, it breaks the level. So we learned from our experience that down to the setup level, when you see this formation, let it break away, and to that level at a turtle soup right there, especially at 9:30 open, let it, you know, explode, let it break away from this cancellation, and then pick that level. In this case, we pick the swing high level at a level to engage right there. So it's a perfect entry, right? We put in the buy stop here, and when it go up, it open here, and then it go down. I mean, I think I mixed both right here. It should be a sell stop because we go short, right? So right here is the typo right there. Just want to clarify that. So it should be a sell stop right there. So we put a sell stop right here, right? It open right here and a sell stop here, so it execute. We get our order fill at about 9:44. And then go look at the chart, see what happened. Okay, now go to the chart. Right here at the 1 minute. So right here we're going at 9:44 right here, right? But it goes into our direction. You see that? It going our direction. Perfect, fine, you know. Happy, right? And we expect it to continue to go down, but it did not. It go back to test our entry. We got a little bit nervous right there. However, it kept going up, and it makes us more nervous or more unsettling, because when we go in there here and we put a stop loss just at this height, here we put our stop loss right there. Okay, just above that high, just 5 cents over that matter. Yeah, so put our stop loss right there, and you see it go all the way up there. We let a little nervous. We thinking maybe we need to move stop loss or get out, whatever. But that's the experience that we learn, that we have to stay in the trade, let the trade play out. So basically, we have to sit through the volatilities. We cannot, you know, expect that it will be easy for all the time. It's not going to be an easy ride all the time. We have to let the trade have room to play out. That's the reason why we put the stop loss right there for a reason. Because we accept it when we go into trade, and we should not change our mind when we see it over here. And beautifully, if we can stay through that process, then it turned out a good trade, right? Okay, so we have to sit through what, 44 to 56. So it's 12 minutes. 12 minutes, we have to sit tight to the pin and needle right there. Get a little bit nervous right there. But if we sit through that, we see it's play out beautifully. Then the next thing for how we do define this target. And we find out that if we look on the 1 hour time frame, okay, so we go back to, okay, this is the 1 hour time frame, but we will look at the pre-market right here. So our target should be the low, the sell side liquidity of the prior day right there. The logic is that, okay, right here it a fall breakout at that time, right? But if it fell to break out this level, which is a swing low or a bearish breaker, or so-called a supply, you know, error or range right there, then the next logic for this move is gonna be this sell side liquidity, because you have to build a lot of buy side. Sorry, I misspoke. You have to build, it have to set up or build a huge sell side liquidity trap or pool in order to execute all the sell order go down here to check this sell side liquidity. So that is the lesson learned for when we go short right here, then our next target gonna be this level. And it turned out correct. You see, all the way here and the all the way here, it check this. When it break through this level, right? it break through all the way to this buy side right there. You see beautifully. Look at that. But the magic that you see all of this, 1, 2, 3, 4, 5. Don't count the aftermarket, but all this they managed to what? To glow up, glow, above the sell side liquidity. It just raised the sell side, but it glow above there. So, and today is Friday, right? So it's the option expiration day is expiring. And you look at this, it seems like the market maker who sell the option, they want to keep the option become expire worthless at this level. So this is why they, a lot of people are short, right, by the put option in order to keep the put option expire worthless at this level, which is 421.23. This is the low of this candle, right? So they try to keep the the price above this, so then all of people who short will lose the money. So you see, whenever I try, if you look in the real time, I watch in the real time and say, wow, what's so strange? When it tries to close below that, all of a sudden it got to pull up. When it tries to close that, someone tries to go in and buy. So that's the market maker doing, especially who sell the put option to the retailer or to any or maybe the institution also. So that whenever who sell that option, they need to buy the stock to keep the price up at that level, so the option will be expired worse, so they make the money right there. So that's our thesis or our explanation why this level is very important. Just imagine, you see 1, 2, 3, 4, 5 hours. You see, if 5 hours it cannot break through this level. That's so beautiful, right? That is a perfect picture. It tells you something behind the scene. But the thing that we really appreciate the principle that the turtle soup, teaches. So we just incorporate the turtle soup the last 2 weeks, and we feel like the turtle soup setup or technique or method or system, for better word, of lack of a better word, it really provides a very, a more clarities when we see the liquidity and how the price will book or how the liquidity run right there at some key level. It helps us to identify that key level, and that really helps us to have more clarities, on the price action right there. And we really see that we really feel like we have some breakthrough the way we see the price book or the liquidity run right there. I really appreciate that we are running to the book stretch mark, and we read the very first setup in that book is turtle soup, and we try to apply this for last 2 weeks and really help it a lot. So we are on the right track right there. Okay, so that's the level right there, and this level helps us to set up the target when the short right here. The target is gonna be this liquidity right there. When it failed to break through this, bullish breaker right here, bearish breaker right here, right? Look at that. All right. So that's the target right there. When we are in this trade, so it's the target is going to be the sell side liquidity, which is 433.21, right? 433.70. That's the yesterday low. Right here, 433 right here. Yeah. But if you look actually it breaks down more. I mean, yeah, of course it amount, but conservatively we are stop right here. You see that level right there? Yes, that's the level that we can get out. So basically it hit at prior day low right here at what time right here? 11:55 at 4:33 21. But if we stay a little bit longer, we can get more money for our buck, more bang for our buck right there. We can get another $1.33 right there, because make the low at 429.88. So that's how we try to define. So and right here we identify, you know, a 4 breakout for long setup, right? So this can give our first target for this short right there. If we want to exit right there, then we can exit at this level and we get, you know, 1 to 3 risk to reward ratio. And we done for Friday, just one trade. We get in at 9:44 and we get out at 10:24. So it's around 44, right? So 20 minutes and about 40 minutes. So we get to move $66 upwards. We stay in the trade about 40 minutes. That's a good trade. However, if we gain more experience, we know that we try to expand earlier, that we're gonna put a target at prior day, you know, close, which is at 4:33.21, right? 4:20.21, this level, right? So basically we exit right here, right? If we exit right here, we target right here conservatively, right? We get our $1.50 something, so $1. But if we identify a better target, which is, you know, prior day close, we got another $3. So basically we have, you know, $4 move right there, almost $5 move right there. So that's a huge profit for us. You see, $4.62, exactly for that matter. So basically what we're doing right now is we try to practice our trade. By practice, we can build a trading system that fits our personality. It's all come down to, you know, individual right there. Fit our personality and our belief. And how do we do that? We just do a very simple practice. Just define targets and execute a trade and try to define targets, right? And that's what we're doing right now. So we define these targets, the next time we know how to do that, okay? Okay, so and right here we feel like, oh, it's gonna be when we walk in real time, we thought it's gonna be a 4 breakout to the outside, so it's gonna rebound. We can identify that level, but as soon as we see it break down this level, okay, let's say for some reason, I mean, we exit the short position right here, and let's see, okay, don't go in and go long at this level, right? Don't go long, watch it, and you see what happened, right? It break down this level and it go back and retest right there. So if we get out here, then we have a chance to go short one more time there. When it's, remember, look at this candle at 10:44, it opened below this level, then you go in and short all you can right there, just 1 cent below. So basically open at 4:34, right? 32, so 2 cents below here. If you look at it over there, all right, you see the open? Yeah, look at that open right there. So basically it opened 4:34.32, which is below our level, you can go in and short right there. So that's an idea right there. Okay, because we go in the trade there, for some reason we want to exit right here because we want to lock in the profits. We feel a little bit nervous because we don't want it to retrace. Then you can see void phase break level. Don't go in right here because it can retrace right there. But if you go in right here, you have to put the stop loss a little bit up here. But wait for it breakthrough and it retest. That's the perfect time to go in right there. Okay, so we can exit right here, or we can exit all the way here, right? That's the short trade right there. Okay, so we have so-called second target. What do I have right here? Yeah, the second target is 418 x1 sell side liquidity. Oh, I see. So basically, it this liquidity 33.80. Let's go back to 1 hour time frame to see what is that. Oh, let me delete some of this. It's too much right now. Where's 30? $33.80. Oh, okay. Oh, okay. So this level right here. So that's the second target, right? Which is this critical level when it's for breakout here. So that can be our target right there. But later on we learned that the better target is right here. This outside. Yeah. So that at real time at that moment we thought that this is a second target. Perfect target, but later on the market shows us that the better target is down here, so that's the reason why we take that screenshots. Yeah, we put the note in here. Second shot, but the best target is at this level, Friday low right there. Yep, that's what we learned. Yeah, let put this, take the screenshot to update our targets, redefine, right? Redefine targets. But targets at right there low at I think 433, right? 20. From 431, 23, not 23, which is good level right there. Yeah, at first we set lead level, right? But the better target is at lead level. You see this level, it hit right there. But actually the better level the market shows is this sell liquidity or swing low of the prior day. Okay, look at the 1 minute time frame when it hit that 433.21. Oh, okay. Right here, this level right here at 11:55. It's on 1 minute time frame, right? So we want to get the hour. So target at Friday low, which is 4:31:23. Yeah, 23. Here at 11:55 right there. So we have both on the 1 hour time frame perspective and 1 minute time frame. So basically we document right here, right? That's the beautiful trade right there. And what is the risk reward? Yeah, we forgot to reward. Okay, at first it's the risk reward on this, right? Risk reward is 1 to 3, right? But later on we can redefine it's humongous, you know, risk reward right there. That's the reason why, you know, we really enjoy the turtle soup because it keeps you the very low risk and high reward right there. So we just stick into the process. Don't worry about, you know, the loss, because the loss is very tiny. We have to embrace the loss and don't personalize the loss at all. And we have to embrace the loss because, you know, as long as we have the positive expectancy in our system, which is, you know, the turtle soup right here, we're good to go in the long run. The more we play, the better we're gonna win. It's like you are the house right there. You set the game for yourself. Okay, so this is the risk we risk. Okay, so here's the risk we have, right? Let's duplicate this and see. We want to show this, right? So let's say we reach 58 cents. That's 1 R. 1 R, right? Then let's see how much we gain. Conservatively, if we just let it run at the Friday low, right? It take more right there. $4. Look at that. So the risk reward is, yeah, I just way. Let's take risk screenshot so we get the idea of risk reward. So we do the document as much as we can detail our trading journal, right? So we have to collect detail that we have to have more information, and from information we have, we generate more knowledge first, prepare us for the next trade when it comes. So we know exactly, you know, what is the risk reward ratio, which is related to the expectancies ratio. So the risk reward right here, basically you have 58 cents, right? And you gain $4.58 conservatively. But if you trail your stop loss, you know, up to this trail stop, you get another $1 something 30 cents. So I think it's about total, I think it's almost $6, $5 something. But anyway, so basically you round up 648. It's 1 to 8 right there. Okay, let's go for it. 1 to 8, you know, not exactly, but approximately, right? 1 to 8 risk to reward ratio right there. Just one trade today right there. You know, just one trade today. Take it easy. We can learn a lot and enjoy the process. Don't worry much about the outcome. When we focus on the process, we improve the process, then the money is just a byproduct. It will come to it at no time at all. Okay, I want to go we have some more thing right here, but never mind. I want to show something real quick before we close up here. I think we think we define a turtle soup setup that perfect. I mean, this morning when we try to operate markets, we see this setup. You see that? I hope you see better, but let me get another version of this to make it more better, right? Yeah, I put into the work document. It may not look good, okay, but directly right there you can see right there. It's perfect. You know, it's like a perfect painting right there. You look at that, you identify the key level right here, right? You know, you can call it spot level or, you know, demand level, but in the ITC called sell side liquidity. This key level, right? It break it down. Then you know what happened? The people follow the trend, right? Trend your friend. So they change that, it goes like that. You see that? This response is explosively. You stop all that people out because they tell us stop right there. And look at it, how perfect it lay up right there. So in order for the turtle soup before a very powerful and very high quality or high probability setup, it has to break through a very critical sell-side liquidity or support level or demand level for that matter. After it breaks that, you start watch out for the retracement for the turtle soup in order to go in and do the fall breakout right there. Okay, you see the candle? Yeah, whenever I see the long wick, you see. And right here, you remember if you mark this level right there, in the ICT one of his video, you know, he said this is a perfect order block right there because it break through this level, and people will thought, oh come on, it break through, then they go in a short right taste, they got stop out right away, right there. And this is have a long wick right there, so it tell you something right there. It open above the entry level, so pay attention to the characteristic of this order block. This candle, it open above and it go through, break that level, right? It's close below, and with a long wick, we get a rejection right there. And look at the next candle. As soon as you saw this, as soon as we saw this candle or we see this candle, we would buy stop right here. And you see that we get out of view right there. It go up, and remember this candle is open above. It has to be open above this, you know, new low right there. And then you see, and it also make a high low right there, so it gives you a signal that the algo is recessed from, you know, sell side liquidity, reset back to buy side liquidity right there. And see, when it break through level, it never look back. You see right there, its retracement was way above the level, so we are in a huge run right here. So that's the idea of perfect turtle soup setup, you know, ready every year. Yep. So we have all the element of, you know, perfect painting or picture for the touch-up. All right, I think that's it for today. We go over about 10 minutes. But we have a lot of things to cover and a lot of time to reflect and to review. All right, thank you for your time. Have a wonderful weekend and see you next week. Bye for now.